Good evening, all. I'm Epstein with your Spider ETF stock market wrap-up, and this wrap-up is for Wednesday evening, and we're now at the 17th of April, 2024. You know, it wasn't so long ago that the market, by the way, 10, 15 days ago, that the market was saying it didn't matter if the Fed was going to stay higher for longer, or if they even cut rates. Earnings are so good, everything's so good, the stock market can keep going. Well, we've entered a different phase. Now you're getting your 3 to 5% corrections in many of the markets. In fact, I think it's the Russell's down about 7.5% for the month right now. And where are the buyers? Well, they're sitting on their hands, or they're scared, or what are they doing? We'll see as time goes on. But we're just at the beginning of the earnings season. I'm going to repeat. If earnings aren't good, the market can go even lower than this by quite a bit. If earnings are good, it starts cushioning the market in its own way. Are traders nervous? Yes. We know that now the reality of the situation is the people that keep saying June, and there are still people. I saw another one today come out. Yeah, we're going to get that June cut. Okay. They are certainly in the minority. Could it happen? Well, you know, anything could happen. You could win the lottery tonight. Anything could happen. But the probability of that, they're just being, I think, not realistic with the situation. That if the Fed was looking for a trend, I think they want to see 3 months of falling CPI numbers, weakening of jobs there. It doesn't have to be 3. It can be a little bit on the way down because their mandate's full employment there. But the inflation mandate, don't lose sight. It's got to come down, and they're not going to go early. How do I know? Because the head man, Fed Chair Powell, said he's not going to make the mistake of Volcker and others that got caught in that trap. Not going to happen. I think that you're fooling yourself if you think it's a June time. And I think the market coming down here is healthy as can be. Does it mean you might have to pare back things you bought a little high? Could be. Depends how long your vision is. You know, what a lot of people do is they enter a trade and then suddenly it becomes an investment because they don't want to take a loss in it. Does that sound familiar to you? That's how it works. We look at TLT, we got a bounce today. Suddenly, we're giving up money in Amazon. All of a sudden, one of the darlings, Netflix, giving up money. I can go on and on with the parade. You can see all the stock indices are lower. Tesla just keeps getting beaten up. There'll be a number that Tesla's a good company at. It's not going to go far from here. I think, you know, you're in the thralls of that already. When everybody gets too pessimistic, they'll surprise you. And I think Elon will come up with something. He's a pretty bright guy. I wouldn't bet against him. But again, I'm going to repeat what I've said to you over and over. It's a car company at the end of the day. SpaceX is a space company. Boring company is a boring company. And it depends how they roll them together and what you think you're buying into, so you got to be very careful with it. In NVIDIA, not a small break. I told traders today you could be going down in this market towards the 800 level. I don't think I'm too far off. You're at 840.33. Down $33 today. Gold even lower today. So you're getting a bit of a break. Now, in Citi, you got a one-day bounce. Not bad. Markets were down today. That market gave you a bounce. That's impressive. You still have a pattern of a higher high, lower low, which is not enticing. The market is still well under the 18-day average of closes, which means a potential support could be the closest of the 100-day average in green or the Bollinger Band. And you can see the Bollinger Band was hit and it's bouncing at it. So that's your battleground. Take out yesterday's low and you open the door for the 100-day average. That's my guess. Are you oversold? Absolutely. So you got an oversold market that has just come off of a big rally. It's come down nicely from roughly the $63.5, $64 zone to $58, $57. Okay. So you've gotten yourself a sizable break in the market. Let's see where it can try to find its way. As I told you, I don't have any faith in DraftKings. I said that I thought the market stunk, and I said that we will see. I timed it to the coming to the end of March Madness, if you'll recall. I didn't care about the last 3-4 games. All the betting was done earlier, and this market's lost its way now. Okay. UGA, gasoline, can drop from here. Too many people long right now. Summer driving season and spring driving season hasn't kicked in. Yes, prices have gone up, but they're coming down now too. So you got to keep your eye on it. This isn't the demand time just yet. In the financial services, well, if interest rates keep going up, this market's telling you the story. It's latched on, and this is called that gorilla glue trade. It's latched on to the Bollinger Band. It doesn't come away from it. And often what the markets then try to do is develop an embedded bearish reading. And that's what it's trying to do. It could work its way down to the 38.90 level. I'm not a bottom picker, don't care. But that's what I think the market's trying to do, is work lower. In XLI, you had a big outside day to the downside at an oversold area. So it's a continuation pattern of the break. To break that pattern, you've got to take out today's highs either on Thursday or Friday. Barring that, you could just be latching onto this Bollinger Band. If the market as a whole goes down, a lot of these will go with it. In FCX, well, you know, one of the things I did is I created a report, a special report for you to go view. I'll talk about it in a minute, but it has to do with the euro currency, not FCX, but I wanted to, as soon as I looked at it, I wanted to do that. Why? Tonight, what I did in my full research report is there was a story. I forgot if I did it tonight or if I did it in the morning. A huge, great story about copper in Chile, how they're going into the new mining methods. You know, if you look from the air, if you've ever seen that, it's unbelievable, the terraces and how deep these mines have gone. Well, what they're doing now is they're boring underneath the mines, not into them, well underneath them with new technology to get other parts. It's much more expensive, but copper's running out. The easy areas to find copper aren't around anymore. The world's using it, and it's going to be a shortage market. Silver's probably in the same thing. So you keep your eyes on all that. And maybe we should take a look while I'm doing this. Tomorrow you are going to get jobless claims. They're going to come out at 7:30. The Philly Fed Business Activity Index at 7:30. Existing home sales for March will come out from the National Association of Realtors at 9. The Conference Board's going to release their monthly leading coincident and lagging economic indicator indices for March at 9 o'clock. And we'll get the natural gas storage at 9:30. So you have a fair amount of data tomorrow that we'll be looking at. When we come to RSPD, look at, you're not even holding the 100-day average. I was surprised. I thought that we would do better on the first challenge of that. This is day 2 of under it, and now you got your embedded reading. So this market on rallies is likely to be getting sold. And what's going on? Well, as inflation stays high, as interest rates stay high, it takes its toll on the consumer. And they start picking more things, which we've talked about here over and over. I find myself going into one of the Kroger stores, but it's a boutique one called Mariano's in Chicago. I'm always looking at the Kroger brand or the other brands, and I try them. Some of the stuff I absolutely hate. Some of it I have found is wonderful. Why would you buy and pay more for the other brand? I find that I'm doing that in a number of the canned goods. Am I shopping for pennies? No, but when I'm buying something and it's 50 cents here, $1 there, it adds up at the end of the day. You're spending on the average in your card. I went today for a very few items, and it was $65. And I mean, very few items. You know, you get what's called grocery shock when you go look at these things. And today I wasn't buying meats. I was buying bags, freezer bags, things of that nature. I wanted to get some yogurt, things like that. It's interesting. And do you find yourself looking for the sales? I do. I'll look at different brands and go, oh, that's the brand I do want. And look at it, it's marked down. It's pretty close to the other. I'm going to do that one. Lower highs, lower lows, still coming down here. And by the way, that's home builders. And look at how they've been beaten up recently. But I think between here and the 100-day average, I said that yesterday, is where I think you're going to find the support kicks into that market. Because at the end of the day, You're going to see people still want to buy homes. There's not a big supply out there. And if they can't get what they want, they'll build it. And they'll find a way to scale back, buy down the mortgages. It still is happening. In XLE, you can see how the energy sector is suddenly let go. Why? Well, we don't know what Israel's going to do. Each day that goes by is a day of calm. And, Iran keeps saying, you attack us, you haven't seen what we can do to you. Unfortunately, they haven't seen what Israel can do to them. And we don't need to see it, all right? We really don't need to see it. There's no doubt in my mind Israel's going to attack in some manner. I don't know if it's missiles, sabotage. I have no idea what's going to happen. But you can count. The pressures on Israel from the United States and its other allies are immense. They want this thing contained. And as I told you, unfortunately, it opens the door for Rafah. And, we haven't heard much, and I'm surprised because their window of opportunity, if they're going to go in, is there. You'll know they're going in when they start evacuating the citizens, which they haven't done yet. They claim the plan's ready. I'd like cool heads to prevail here, and Hamas is not going to get their way. Not going to happen. Higher high, lower low. You can see how the market is still coming down. In the gold, you've sort of flattened out, but start watching here. You're losing your bullish embedded reading. In fact, let me use past tense. You lost it. Unless you get a good day up tomorrow, and this stays like this, the odds favor that prices are going to retreat a bit, trying to get towards that red line over the next few days. Silver market lost its bullish embedded reading. So these are not markets right now that I would be telling my clients to buy. They have to prove they can come back, and the only day you can regain a bullish reading is the day after you lose it. In the copper market, you've lost the bullish embedded reading. So suddenly, all the markets that were running in these moves are in a correction phase, especially in terms of momentum. Yes, they can get it back tomorrow. If they don't get it tomorrow, it's very hard to get back. You normally then finish up. And look at how interest rates, you keep getting these bounces as long as you have embedded readings. I predict the pros are going to sell this market. I know what I'll be telling my clients in the morning. UUP, backing to the other side of the Bollinger Band. You only stay 5% of the time over that black dashed line. So if you're looking to be a buyer, that's your way, and you're embedded. So I think on these breaks, the pros are going to buy UUP. I think they're going to sell BND, TLT, and if momentum shifts, they'll come out. FCX, well, this is FXE, I'm sorry. On FXE, this is the one that I'm looking for a rally for what? This is the one that I'm telling clients, I think that on the rally, the euro's going to be the short sale. It's not here yet. My report covers that. And if you're interested in that report, it's right here. So here's what it does. I go to the report and I look real hard at what the futures are doing, because you're going to trade FXE off the futures. And once the future sell signals come into play, I talk about them. I look at price counts. We already have them. The first downside target's 103.50 or around 107. Parities are possible. I look at world events. How could you not? Because they're back and forth. But it's also which banks are going to cut rates, who's going to be the leader of it, where are they going? The U.S. is going to be the last one at the dance standing. All right? That's come to the conclusion. We're not going to be the leader on this. Probably the euro goes in June. Keep your eye on it. If you saw the interview last night with Ms. Lagarde and you didn't pay attention, it's pretty much what she was saying. If, in quotes, the word if the data stays as it is or weakens. But if it gets strong from here, she'll hold back. You want to look at this. You want to see what it is. It's only up for 3 days on the website. So you go to iraepstein.com, you go to the word research, you can move your cursor to the top here and go there and take a look at it. It'll be off come Friday. So I do hope you take a look. I think it really covers in a lot of detail what I'm doing. And as I told you, I'm going to be doing more of these on different markets, on different individual stocks and the like. They come out real often now going forward. I intend on putting one out at least every week. So minimum. Could be one on futures, one on the other. So I'm getting myself, now that I finished my charting course, the new course, I'm ready to do these. You have yourself a good evening. I'll catch up with you all in the morning update. And of course, look at the other videos tonight as well. Take care.